Hey, what's going on, guys? Bot Mentality here. Just bringing you another video today, and this one's going to actually be on basic charting and different techniques you can use. This is something that is a very powerful thing to use. It's fundamental, and it's always good to fall back on. You know, a lot of times, people can get caught up in all the advanced indicators and all the different Fibonacci retracements and E-waves and RSI, MACD. There's, you can put so many different things on your charts. It just gets confusing. And it sometimes can be a little bit counterproductive. So what I like to do is just bring things back to the basics. Let's just focus on the bare minimum. What do you need to know to start day trading? What are the basic resistance lines you need to be able to chart and trends you need to be able to recognize? So this is going to be just the bare minimum for people who are new jumping into trading. And let's go ahead and jump into it. So the few different kinds of lines, the first two, the main two that you need to learn are what is the support and resistance and how to chart that. And there's different ways to go about doing that. So the first lines are going to be horizontal lines. For example, we're on the 4-hour chart here. Say, and this is on Bitcoin to USD on Coinbase. Let's say we go ahead and zoom in here to this area. So each one of these candles is going to represent 4 hours. And we'll just go ahead and pick a place. So if you notice here, the price on Bitcoin topped out here at 11,600. Pulled back here and pushed back up again to 11,600 and topped out again. So what you do, if you draw a horizontal line between these 2 points, what you're going to find, go ahead and put that right there, is that if you look back across this line and look into the past, you'll see here we had 1, 2, 3, 4 different tops at this point as well. Some over here, and if you look back over here as well, this is back in December of last year. You see we had a top out here and a little bit of a base here before it shot upward. And so what you're going to find is that before these 2 tops even occurred, if you look back in the past, you'll see that back here we topped out. We topped out on it right here, 11,600. Then we bounced and it became, the resistance became support. Move over here. You'll notice here, January 25th, we topped out at 11,600, pulled back. Topped out again, 11,600, pulled back. And same thing, touched again right here. Tried to touch it and failed, and then headed down. So what you can look at just based upon this chart, when you see these tops, you can look back into the past and say, okay, chances are 11,600 is going to pose as resistance. So when you're buying these dips, okay, you can anticipate that when the price reaches the 11,600, you're going to see some resistance. And we saw that not once on the bounce, but twice. Okay, so that is a horizontal resistance line. It's just going to be a specific price level, just one point. You can look at different time frames. You can look at the minute, the hourly, the daily, whatever you want to look at. All of them are going to, they'll give you different levels of strength of indication of where the support is or where the resistance is. Because if you look at the 1 minute, it probably won't be as strong as if you're looking at the 1 day or the daily or the weekly chart. So that's how the horizontal resistance lines works. Now, there's also diagonal. So you can see trends, for example, you can see one right here. I'll go ahead and draw that for you, where resistance, and support could be based off on a diagonal axis. And so a lot of the ones you can draw, and here we're still on the 4-hour chart, you can draw one, like this here. Let me see. There we go, just like that. You can see we had one coming down like right there. You can even zoom out. You can delete that. Let's see. You can delete that right there, and you can even zoom out even further. Let's go to the day, the daily chart. And you can draw one down here like this. From the top here at 19,000 all the way down. You're just connecting the tops of the wicks all the way down. You can kind of see when you connect those. Zoom out here a little bit. You kind of see where the price bounced off here, pulled back. Here's where it found support on that line and moved upwards. And you can draw the diagonal lines however you want. You could draw one connecting this top straight down. See where it would connect here, or would have connected there to kind of show that downtrend. And when we break above that line, for example, let me just draw that here. When we break above that line right here, you could have drawn, once you saw it trying to push above this 11.5 area and pull back, you can draw that line there. And you see once we broke above that, we had a short-term uptrend there for you to keep an eye on. So there's ways to do diagonal resistance as well. I'll be honest with you guys, I don't use those too much. Unless it's on a very short time frame, like a 15-minute, where you can see price sort of funneling. I'm looking for a good example. Yeah, here's a good example for you. On the shorter time frames, if you see price funneling like this, where you have these multiple tops coming down like that, oops, get this here, and then you have, again, the bottoms, the 2 horizontal bottoms here, and then ascending price action with higher lows right there. this is more of a realistic example for me of when I would look to make a trade based off of this. So you see that, you know, we have the high here, lower high, lower high, lower high, lower high, and then we also have higher low, higher low, higher low, higher low. So we're getting to the critical decision-making point when either the buyers will win or the sellers will win. And if, for example, if you bet here like I did that the buyers were going to win, there you go. You see that push upwards in the short term. And so this is more the sort of level where, you know, a horizontal price level won't be as accurate to be used to time your entries as a diagonal price level. But you can certainly use it on, you know, different time frames as well. You could have drawn one all the way down here. You know, when we broke that descending line, push up, you can see we have some consolidation to move back upwards. So that's how you can kind of use diagonal lines. So there's horizontal and diagonal lines for you. This is just very basic. And it just kind of helps you visualize price action. I don't want to get into too much of the technicals. I don't want to get into, you know, it has to be wick to wick or it has to be candlestick to candlestick and all that kind of stuff. I don't want to get into that because it's just basics. It's just you understanding, drawing lines on your charts, and kind of what that can represent regarding support and resistance. Now, okay, now areas to focus around to use these lines. The biggest thing I would say is regarding the horizontal lines. You want to look at whole and half dollar marks. For the first thing. So let me go ahead and explain what I mean. So let's say you look at the 4 hour again, okay? So here's the 4 hour. And so what I do is I take horizontal lines, okay? And you want to put them at the big price levels because, you know, more people are probably going to set their order at you know, at 10,000, 10,500, 11,000, 11,500, etc. Because it's just a nice even number that we can, it's easy to kind of remember that and calculate profit and loss and things like that. It's a psychological level. So for example, you want to put one at 10,000. Okay, if I can get that as close as possible, right about there. You know, I'll put one at 11,000 or 10,500. Let me see, here's 10.5. Get as close as I can. You know, I'll put one at 12,000. You know, definitely one at 11.5. That was a big area we talked about earlier. We had some tops there. You know, you can put one at 13.5. Right in here. Right there. And so just from judging from some of these lines, you can see here on 13.5, you know, we had one pullback here, pushed up, another pullback here, washed through it, but then held. And this is where the bottom of the candlesticks held. We pushed up, pulled back to it, held the 13.5, pushed up, pulled back, bounced off the 13.5, then we pulled back through it here, eventually bounced our way back up. And so as you can see, we pulled back over here, and this 13.5 area was a key level of support. And remember that previous levels of support will become resistance and vice versa. So the whole and half dollar marks is something I use the most often because it's easier to kind of set that, especially when you're looking long term, and use that as sort of price topics, engaging where price targets, engaging where support and resistance is and will be in the future, is the whole and half dollar mark. So you can use that on any time frame. You can go down as small as you'd like to. It usually just, you know, things turn out where the support and resistance will be around those points. Especially, you know, we saw one at 10,000. We see this one here at, you know, 10,000. We had a bounce here through 10,000. It held here, pulled back to it here, held. We have resistance here at 10,000 and pulled back. We had a push up towards 10,000. It held as resistance before it pulled back and broke through. You know, it held as support right here. You kind of see what I'm talking about regarding 10,000. That can go all the way down. You know, you can do 10,009, 8, 7, 6, 5, and then the you know, $500 increments as well. And this can be used on any coin. So there you go. So there's the whole and half dollar marks I'm referring to. Those are great points to plot horizontal trend lines and support resistance lines. Now, another thing you need to look for on a chart, you want to pay attention to large periods of volume indicating tops and bottoms. You know, for example, over here on Bitcoin, you know, we had this huge wick. Okay, you know, we pushed up towards the 19,700 area on high volume here. And then over here as well, as we approached that area, that actually held as resistance. It broke above it for a little bit, became right back down. You want to pay attention to those high levels pushing upward. Also, excuse me, similarly, you want to pay attention to areas of large volume when the price shoots downward. This would be a good example here. I think this would be good relative to prior price action. You can see here we had a huge sell-off on Bitcoin from 13,000 all the way down towards, you know, 6.5 here. Increased volume here kind of indicated a sort of bottom, that the bottom might be close essentially. And then we did in fact bounce from that area. Those are kind of areas you want to pay attention to. You know, right here, increased volume compared to the prior volume. You know, we had a bounce right there where the buyers come in and just, you know, really fought the sellers off in that area. You can see kind of over here. Those, and right here, We had a pull back down here to 8,600. These are areas you want to look for as well. As far as support and resistance, you can plot lines on those bottoms, and you'll find that a lot of times, it might line up with a whole $0.5 mark. Like here, this lines up with 9.5 and the increased volume, or you might find it'll line up with resistance like it did here. So if you want to look at increased volume areas, let's see, we're at 10 minutes now. I'll wrap this up here. So another side of the side that you want to look at this is the technological side. So why is this basic charting so powerful, and why shouldn't it be underestimated? Now, you definitely don't want to underestimate the basics. So, the technical aspect is, for example, if the price of something is at $10 and it moves up to $10 and never breaches $10, most people are going to start selling it when it gets towards that high price because they're going to believe that it's not going to go higher. And and vice versa, if the price is low, oh, excuse me, that's my phone going off there. If the price is low, chances are you're going to be more likely to, if something is priced low at $1, you're going to be more likely to sell it, or buy it at that low price because of the fact that the price, normally doesn't go below $1. So if it gets to $1, you're going to be like, this is as cheap as it's ever been, and you'll buy in there. And so the psychological side is where I think the biggest power is. And by that I mean, so with basic charting, the more people that see something, the stronger the effect. Like this level right here, for example, on 13,000, obviously there's big support. We had multiple lows here bouncing off that 13,000 area. And when that broke, we had that huge wash off down at 9,000. So the more people that can draw a basic line, the more people that see something, the larger of a target that's going to be in play. The more people that are going to make buy orders and sell orders in that area, you're going to have increased volume in that area. So it's very important to pay attention to the basic charting, and if everyone can see it, chances are that's where the biggest plays is going to occur. That's one of the biggest points as far as why basic charting is so powerful, is because of the psychological aspect. And the simpler the better for that same reason. And so really, I think that's about it. We covered the diagonal support and resistance lines. We covered horizontal lines, which I love the horizontal lines, guys. Make sure you're putting these. Every whole $0.5 mark respective to your price action. Go ahead and put those in there. It's very, very helpful. Let's see. We talked a little bit about the technical side of why basic charting works, also the psychological aspect. And I think this really covers it. Again, don't underestimate this, guys. This is where I rely most heavily in my trading, and it definitely paid off, and it definitely continues to pay off. So, all right, I think that's about it. So again, this is Bot Mentality, and remember, trade like a machine.